Hey guys, I was just sitting and thinking that I would make a three-part series on buying a car, particularly the process if you're going to go to a dealership and buy a car. I again, this is my opinion, as is the situation with all of my videos, but the reason why I'm kind of inspired to make this video is because I used to work at an auto finance company. I never worked at a dealership, and I recently purchased a car. And I made some mistakes, some rookie mistakes that I think I should tell you about to try to help you avoid. And I think I have some, useful ideas and tips to take into consideration before you're buying a car. And so in this first video, I'm going to focus on steps that you should take before you go to a car dealership. So, working at a finance company previously, one of the biggest things, or to me, there's really two big things, and there may be something that I'm missing to consider before you go to a dealership. And really, it's the price of the car and your credit situation. And guys, I know, speaking about credit, it can be tough. You don't, want to look at your credit score. Sometimes you're trying to figure things out. It's kind of frustrating. It's really intimidating. You just want to go to a dealership and get a car and get it done. And that's all, fine and good, but you have to think about this. You are, typically going to be financing a car for 5 years. And if you go into the situation unprepared and you don't have an understanding of your situation, you can be taken advantage of pretty easily at a dealership. So just to, my first tip, number one, before you go to the dealership is pull your credit score and take a look at your credit history. I would say if you're below 550, you may want to consider, if you have steady income, buying a car, saving up, $2,000 to $5,000 and buying a car off Craigslist and Auto Trader. Or if you're in a really tough situation, you might need to just buy a beater car. Under $1,000, under 1,500 or $2,000. Now that's not the most glamorous situation, but especially if you don't have steady income, you're not working, or you're in a situation where you just have so many bills that you don't know how you're going to pay something. Don't throw all caution to the wind and go to the dealership. I strongly advise against that. And this isn't a dealership bashing video. I don't think dealerships are inherently evil, but I think if you know yourself and your situation, you know what you're willing to pay, then you can better negotiate, a situation that works good for you and the dealer. Obviously, you want it to work more favorably for you, but they have to, get a little something out of the situation. And so, like I said, if you're in between jobs or you don't have steady income, beater car. Under $2,000, save up the money because you have to pay registration, you have to have insurance, get that settled. It's not the most glamorous thing, but the goal here is to get from point A to point B. And then I would also say if you pull your credit and you're under 550, it's not that you cannot, get a car, but one thing that you want to consider is when you're financing a car, interest rates, and I'm not going to be super specific in here, but when you look at loans, interest rates, the percentage of your interest rate can have a strong will have a strong bearing on how much you'll pay over the life of the loan. So, if you have, poor credit, the higher your interest rate's going to be, and the more you're going to pay out over, the life of the loan. And in a lot of situations, if you have bad credit, especially working in the finance company that I used to work at, you would see people with bad credit. And a good interest rate, I would probably say, and this is a matter of opinion, but I would say if you could get under 7%, that's really good. I've seen people at that finance company that I used to work at, they would have 15, 20, 25, 28% interest rates. And what happens on those loans is you're upside down for so long that you really, until you get to the end of the loan, and this can be a situation with a lot of loans, you have to pay it down a certain amount before the car's value is greater than what you owe. But you get into a really bad situation if you're upside down in a loan for a long time because if it's not a newer car, by the time the car is paid off, it could be falling apart, especially if you're going to finance a car that's over 5 years old or 8 years old, things like that. So you want to keep that in mind. And also, even if your credit is not that great, you always, always, always want to check out financing options before you go to the dealership. If you are a member of a credit union, can join a credit union, I highly suggest you doing that. They offer, probably some of the lowest interest rates you'll ever see. And if not, try to get a loan from your bank, because that way you go to the dealership armed with an interest rate, and you know that you can go to the bank and they'll say, look, we'll finance you for, $14,000. And here's the parameters. We don't want a car over 8 years old, this, that, and the third. And then you know what your payments are going to be each month for that. The reason why I say that, guys, is because if you go to a dealership, this is a question you're going to hear a lot if you're not prepared. And even if you are, they're going to say, how much are you looking to pay per month? That question you do not want to answer. You want to already know what you're going to be paying per month before you go to the dealership, because you want to have your financing lined up. The reason I say that is because that is a deceptive question, really, to be honest, because that doesn't tell you what you're going to pay over the life of the loan. If, the dealership says, oh, I can get you at $325 a month, but they may put you in a 6-year loan versus a loan that's for 5 years, and you're going to end up paying a lot more over the life of the loan. Or they may say, yeah, I can get you at $325 a month, and you're having a 14-15% interest rate when you could have gone to a bank and got 7 or 8% and been at, and these are hypothetical numbers, I'm not really doing the math in my head, and then be paying, instead of $325 to 85, something along that range, $280. So that is extremely important, because when you go to a dealership and get financing, oftentimes they work with a handful of financing companies where the dealer will run your credit and the financing company will say, okay, dealer, you can finance this person between 12 and 15% interest, but anything over 12% interest you can take for yourselves. And so, guys, they're getting a cut on top of that, and you're losing out because you're paying more over time. So that's where knowing your credit score and having the ability to say, you know what, I already have financing lined up, and then you can move on to the specific car that you want. And so I guess I will cut this video off here. If you have questions about that, I know that's pretty basic, and I was covering a lot of information. Put them in the comments below. I'll do my best to answer them. Again, I don't know everything, but I did used to work for a finance company, like I said, and I've seen a lot of pitfalls and a lot of mistakes people made, and I'd be glad to answer any questions, because this is a big deal. I mean, it really impacts your life, and it's not as big as buying a house, but I want you guys to be safe and get the best deal for the best vehicle that you possibly can. And I'll see you in the next video.